Russia, oil,
Yeah.
China, Taiwan. Buy the market.
We haven't even talked about rates yet.
But, I mean,
or the 2-year.
But then you come in like yesterday, and there's this kind of weird futures move, traps people. They get all excited. Then it goes down, and then around quarter three, people get excited again, and then it goes down. Well, how about the best thing to do is wait? How about just wait? I mean, when is that? Now, on Twitter, people say, I can't believe it. Cramer's so equivocating. He's saying wait. Well, I'm waiting. I mean, I have to put my self-employment plan. I put money into work every month. Why do I do that, people on Twitter? Because I want to save. I mean, now, it's entirely possible that it's like, don't pass go, don't collect 200. I'm living a game of Monopoly. But I'm not. What I am saying is I'm getting 4.5 to wait. That's pretty good money.
Actually, interesting piece in the FT today, why I'm finally warming up to bonds after many years. To your point, Jim, about relative attractiveness. What's Costin's line? There are reasonable alternatives.
Right. I mean, I deal with this terrific woman, Noreen Shevlin. I call her my CEO of my life. My wife is CEO of everything. And she said, look, we do this automatic investment in the Vanguard for S&P fund, which we're allowed to do. And I said, whoa, I got an idea. Can I get 4.5? Yeah. Well, I don't know.
No, listen, and that's our bond market. We haven't even talked about the UK bond market, which is showing signs of volatility far in excess of anything we're seeing, given a lack of liquidity there. The Bank of England coming to try to help. Journal had an interesting story about how it even now has sucked in or caused price dislocations in collateralized loan obligations. No. Not an unimportant area, CLOs.
No.
Because they needed to be sold by investors in the UK. Got to keep an eye on that. And obviously it's not anything comparatively in terms of size to our bond market, but the Bank of England is working hard there to make sure things stay in some equilibrium.
Do you remember the Twilight Zone where the guy behind the bar actually had 3 eyes?
Vaguely do remember that.
Before he sent the bus. It was
Yes.
Twilight Zone. I love Rod Serling. Well, I mean, I only have so many eyes.
I just said keep an eye on it. I didn't say, to be fair, I didn't say all eyes.
No, not all eyes.
That is an old
Or on
favorite
the
of
heels
ours.
of. You didn't do that either.
No, I didn't do that.
But someone could say, well, you liked it. It don't. No, I've been pulling money out of the market for my travel trust. And I like to talk about both what I'm doing first.
Look at that move.
Well, it's okay. Can I just say that Jamie Dimon was a little more nuanced than we're making it?
Well, I was going to say, all this talk about the UK, pounds down for the 5th straight day. They're adding these index-linked gilts, even though they're supposed to go back to QT at the end of the month. But Dimon's general point yesterday was that it's problems in Europe that the U.S. is going to import, and that's what's going to lead us to a recession, likely, he said, in the next 6 to 9 months. Here's what he said.
Stock markets, where do you see the trough for the S&P 500?
Oh, I don't know. Look, it may have a ways to go. I mean, it really depends on that soft landing, hard landing thing. And since I don't know the answer to that, it's hard for me to answer that. But it could be another easy 20%. And I think like the next 20% will be much more painful than the first. Rates going up another 100 basis points are a lot more painful than the first 100 because people aren't used to it. And and I think negative rates, when all is said and done, will have been a complete failure.
I mean, he does start off by saying, I don't know. And, Jim, it would mirror a conversation you and I had yesterday, which is I asked you about S&P earnings, and I talked about people who are negative saying, listen, if they're below 200 and we stay at a 15 multiple, that's down 20% in the S&P.
Right.
Doesn't mean it's going to happen, but it is certainly one camp, and that seemed to be all he was trying to embrace there.
I'm going to be definitive on this. What he said was he did not concretely predict this. He didn't. We were making it as if he said, and it's going down 20%. I mean, look, I go home, my wife says, did you hear Jamie Dimon says it's going to go down 20% and we're in recession? We're going to have one. And I say, no, he didn't concretely do that. He said, this is possible. He put it as one of the. I said, look, why are you're defending him? I said, I'm not defending him. I'm saying if you go listen to those words, he very easily said, listen, I don't think it's concrete. He's not predicting it. But at the same time, Julianne did a great job, and you tend to think that Jamie was once again lowering a boom. And he's not. He's saying it's within the realm of possibility.
Shepard Smith here. Thanks for watching CNBC on YouTube.